What's going on, traders? Hope everybody had a great day. It is Wednesday, July 26th, and we will be doing an analysis of the S&P 500, the Spider ETF. FOMC is behind us. Powell has raised rates once again, 25 basis points to be expected, pretty much priced in my opinion. And so we'll be doing some macro analysis here and looking into tomorrow for some potential actionable setups and a daily plan and some levels that I'll be looking at. That being said, before we get into it, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, here. So we're starting off with the macro, as always, the bigger picture. As you can see, we really have not gone anywhere in the market, just trying to shift, higher, but not really seeing the follow through to the upside as we hang out in this supply area just above 3-year value area highs. And one thing that's starting to come to mind, the longer that we stay up in this area, if any of you are familiar with Wyckoff market theory, I am wondering here if we are setting up into a broader range of distribution here in the markets. The other thing that I want to mention is that seasonality-wise, I almost said October, August is usually a weaker month as far as seasonality is concerned. So it will be interesting to see how that plays out, if at all, as we close out July and start moving into August. And the other thing I wanted to mention here, we still have not really been able to confirm over this swing high. Today we tried to, but the swing high of the 19th still causing some issues. That's around 456.50, we'll call it. We've tried to break over, haven't been able to. You can see here how we came down lower today, then pushed back up towards the highs. Meta, of course, did report earnings today and beat and moved up pretty nicely, helping the market in after hours. But we'll have to watch how this progresses and see if we do start to see any weakness come into the spider here. But personally, I've been talking about potentially seeing that retest of 444, and for me, yes, I am still bullish. I do still think we're going to hit 460, maybe even a little bit higher. But markets need to pull back to kind of reset, so we avoid that type of a melt-up situation where things kind of get out of control and get really unhealthy as far as price action is concerned. And I'm still bullish overall, sure. And I know that I've been talking about a potential pullback for a little bit now in these videos, and we have not seen it yet. So let's see, if the seasonality comes into play here into August. Other thing I want to mention here, let's look at this other bigger picture macro chart that we have been keeping an eye on. Let's go 5 years. Let's go weekly. We were watching this trend line, and you can really see that when we broke over, it really propelled the market even higher after we broke out over this key trend line that I was trying to originally short a few earlier in the month, but we are still in this very interesting area here. You can see multiple points of contact as we've come up into this zone. You can see the high here from back in April, I guess this was last year, as well as the February highs, and here in at the end of January. Now, of course, every time I get speaking, my cough starts to get going, so I'm gonna turn the gain down. Okay, I apologize about that. Very annoying. It's still just the most lingering cough here, but from my cold that I was battling earlier, pretty annoying. Actually, let me get a sip of some water. Okay. Um, so it's very interesting where we are in the markets. You can see these where we've hit here multiple times, and we're just right in that area again. So the other thing I want to point out here, we're going to go to our other macro trend lines here, and let's just flip into the daily real quick. You can see this other trend line that we have been watching as well. Markets keep trying to push over and keep failing this breakout. And you know these failed breakout moves, can be signaling something in the markets. The inability of bulls to really show that follow through that we need for those higher prices. I'm still personally in favor of a bit of a pullback, so that way we can just cool off, reset, and then make that move higher. We have been seeing some really nice strength, though, in some of the other indexes. The Dow has been on a straight tear recently, and we were talking about that in another one of our past videos, that rotation out of tech, which really had been the high flyer at first, and now we're seeing the Dow trying to catch up with tech, as tech has kind of stagnated a little bit, and this rotation is just natural and healthy. One could say that, is it a move to more of a risk-off environment? Well, I'm not so sure about that, but you could make that argument, certainly, as usually you see the Dow move in more of that risk-off type of environment. You see tech and growth like IWM. When they're really moving, it's kind of more of a signal that risk is on, right? And so let's start to dig in a little bit deeper now and look at how I traded FOMC today. Definitely my least favorite FOMC that we've had all year. And I'll go over how I traded that, as well as what we're looking in for tomorrow. But overall, really, these levels have not really changed. So um, we'll be covering a lot of the same areas that we have been over the last few videos. So let's go in here really quickly. Now, how did I trade FOMC? Now, we've been watching this balance range, right? This is the range now we've been watching. Let me go into, I guess, a 30-minute. What do we do here? We've been watching this balance range as we've been trading back and forth. And today, for FOMC, we really covered the whole damn range. And it really gave those who were prepared a very nice opportunity for two trades during FOMC. I actually had one loss and then two wins. I did two options plays and one futures trade. So we'll go over that here right now. So the first move I was looking for, the way I like to play that FOMC, is the thing that was a bit tricky about it for me was, you could see here we had the initial release, we had it up, and then we had it back down. And so, this was kind of a choppy reaction, kind of delayed reaction, as Powell started speaking, normally you see a first move like this right at, in either direction. It could have been up or down. You would see a reaction like this at first when the numbers are released, and then we fade that number after, or we fade that move when Powell starts to come on. But we saw this initial reaction, then we started heading down as Powell started coming on, then we shot back up. So actually, I went short right under our 455, our half gap, 454.83, and I actually took some shorts here, and I got, of course, stopped out. I got out pretty much when we broke over the highs here. I gave it a little bit of time, trying to wait for a confirmation, but as we really started getting moving, I just had to get out as price moved away from me. So that sucked. But then when I noticed us breaking out of our balance zone, I took another stab at the short here. I did not get the top. That's of course impossible. I'd like to say I believe I got in right as we came back into the balance range. A failed break setup, right? We tried to push higher, could not push higher. Sellers came in and pushed down. Now we were creating a bit of a flag here. And 456 was holding. We were holding basically this 25% of the quadrant. And for me, honestly, I was thinking to myself, yes, we've got this bull flag, but something told me, and I've been in the markets here for a while, but it was too obvious, right? The flag here was just too obvious to me for that to be the correct play. And so I was holding the short, playing that failed breakout setup, and we got paid. The markets tanked back down to the bottom of the range. I did not catch the lows, but I got about 120% on my puts. I did not play 0 days. Probably would have been more if I did, but I wanted to play it safe. I got about 120% here on this trade, and I'll take that any day. Got out most of my position down here in this lower quadrant, and then I did not play options here. I was also experiencing a little bit of IV crush as we came down into this area, and the volatility started to slow down a bit. But when we were hanging out down here, it's a little bit clearer on futures. We actually broke my range just slightly, but again, we tried to break below, and then we started pushing back up, and I actually took longs down here. I got in. The futures chart was about 45.80. I think the low that we hit was 45.73. I did not get that, but I got the recapture of 45.80. So I believe that's probably around here in the 453.72 area where I initiated a long on the futures chart and took it all the way up back to the top part of the range. So I did 45.84 pretty much to 46.05 or somewhere thereabouts. So that turned out to be a very nice trade. I held into Facebook earnings my last little bit where we got this final pop, and then I exited the position. So, we've been covering this balance, this range for a while. And if you had it set up here, really gave you some nice opportunities. Even if you shorted here, yes, this probably would have given you a bit of a clencher for the old buttocks, but the safer way to play it, and I always talk about this, are the look above and fail, look below and fail. And this was a classic example of the look above and fail. Pushed above, came back inside the range, failed breakout, initiate the short, and then boom, we take it down. So those are the three trades I took. First one I lost on the short right here, and second one I took another short for a win, and then I stayed away from the options and took this long on futures. I didn't want to mess with the shrinking IV and any of that as we came so close into the end of the day. So um, so let's look at what we're going to potentially do for tomorrow. Right now, as things stand, we are just slightly pushing back above our balance area here. So things are looking pretty bullish. I will be wary of another, the potential fake break setups. But if we can get over this 457 and really confirm, then we'll be looking for higher targets, potentially up to 457.50, 457.88, 450, 458 even, 458.50, and then we'll be looking for 459, 459, 55 here in this area, and ultimately we're still looking for this target up by 460 or so. Shorts need to break back below 456, and if they can, targeting back towards this half gap here, back at that 455 area. If we do come into 455, since we have confirmed over it, yes, we could potentially try a long in this area. I wouldn't be opposed to that idea. Maybe a look below and recapture for longs if something like that sets up. We are, well, never mind, we're on the 10-minute chart here. But even below that, I'm sure this point of control, and this is only a 10-minute point of control, but I'll also be watching for 450, 454.30 here if we do dip below and tag this and then potentially make moves up higher. But we'll have to see, how that plays out. Otherwise, shorts really, like I said, yes, you can get that potential failed breakout set up for some short trades, but the real short trade that we're going to be looking for is if they are able to confirm back below this range. And, we have to obviously be careful there because, these big areas can give these false signals, just like we saw right here, where they tried to break it down. And then we were bought back up, back into the range. So got to give it a solid confirmation, probably more than 15 minutes, at least 30 minutes, maybe even an hour below this range to really have that true confirmation for the potentiality of trading back down into the 452 area, 451, 451.36. And then if we can break below that, of course, we're looking again for the half gap of the previous balance area right around that 450. So we'll have to see how that plays out. But as things stand right now, we are just slightly drifting up higher. It seems to me, I'm going to throw a bone out there. Tomorrow we might see something where we push up early in the morning and then we start to see some selling come into the markets and potentially come back down into the range. So that's just a wild guess and speculation, but let's watch out to see how that plays out. I think that's pretty much everything I wanted to go over. Definitely a tricky FOMC as we didn't see that initial first spike on the data, which was a lot easier to fade. We had to wait a little bit later. Maybe I even jumped the gun going short here, and I should have waited till, because you can see here the top was more or less at 2:30, a little bit later than normal. So it was definitely a little bit trickier, but the thesis overall did play out as far as that first real volatile move was fake, and then we were able to bounce from the bottom range. So definitely tricky, but yeah. So a lot of the levels have not changed. We will watch tomorrow what happens. I'm actually going to mark off right here this swing high just to have it there, basically 457, and we'll see what we get tomorrow. Either way, I wonder if we get a trend day this week. That would be nice. Well, it might be tomorrow. It might be Friday. So let's see if they have, if the institutions have one in for the books. If we do stay out of this range, or at least hold 456, we could see a nice move to the upside, but we'll see how it plays out. All right, guys. Well, I hope everybody has a good day. If you found this helpful, don't forget to like the video. That really helps us out a lot. And subscribe to the channel for more market updates. All right, take care and have a good one.